Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. My name is Silver Slayer for a reason. It's not Bitcoin boy, it's not gold guy, it's Silver Slayer. I didn't just randomly pick silver out of a hat. It's called Wall Street Silver, not Wall Street Gold, for a reason. There's such a big silver stacking community on YouTube, not so much gold, and there's reasons for that. And I want to discuss some of these reasons in this video. A lot of people do get introduced into precious metals as gold probably is the option they assume would be best, but then they find this more affordable, more opportunistic metal, which is silver. Well, I found an article. It's talking about silver versus gold, assessing silver's valuation compared to gold. It was only written a couple days ago as well, so it's relevant, it's up to date, fresh off the press, and I want to break this down and see what they have to say. I have not read this article yet. I want to react to it fresh with you guys, and I think it's going to be a great type of video to show not only people that are new into the world of precious metals, but even old stackers, because I do think you should be accumulating some gold with silver, as gold does have its benefits as well. Not as much as silver, but there is reason why you should add gold to your portfolio, to your stack. But before we jump into that, I wanted to mention I'm doing a huge giveaway, and if you wanted to enter, links in the description or the pinned comment, giving away a lot of silver, talking about over $1,000 worth, made luckiest stacker win. Also, if you wanted to purchase some silver or gold, hit up Miles Franklin, send an email to info@milesfranklin.com, let him know Silver Slayer sent you. You could buy $10 worth of silver, you could buy $10 billion worth of silver. Andy Scheckman will fill that order. If you guys don't know, he's the CEO of Miles Franklin, and he is the most well-known person right now. He is the guy right now. Everyone wants to get a hold of him. And, he can pull off things that nobody else can. He pulled off that $50 million order last year, and I'm not surprised since he has so many connections. Nobody else can really pull this stuff off that he does, and he's very, very respected. So hit up Miles Franklin, send an email to info@milesfranklin.com. Like I said, let him know Silver Slayer sent you. Right now, the gold to silver ratio is 81-1. And what that means is it takes 81 ounces of silver to equal or equate to 1 ounce of gold. Historically, it's been around 8-1 or 16-1 for thousands of years. Remember, gold and silver have been the earliest forms of money. We're talking ancient biblical times. Since both of these have extreme value, there's a reason why silver has always been money and will always be money. It cannot be created nor destroyed. Unlike fiat, which only lasts around a century, precious metals last thousands of years. We're talking about elements on the periodic table. The gold and silver came from meteors and asteroids. It doesn't get created in the Earth's crust. There's only so much, and it's the main metal we need for technology. So just put that together. And I'm talking about silver more so than gold. But anyways, that is the gold to silver ratio right now. 81-1 or 82-1. Back in the day, some say it was even 2.5-1, even 1-1 at some points. 2.5 parts silver equals 1 part gold is the earliest ratio I've ever found, and that was back when they thought silver was literally magic. They thought it was magical, unlike any other metal, because it responds with other elements like no other metal. It can purify water since it has antimicrobial properties. If you put silver in milk, it keeps the milk fresh longer. It is the most highly conductive metal for thermal conductivity, electricity, and even light sensitivity. Nothing performs as well as silver does, so they thought it was magic. But over the years, you see the ratio just started expanding, and it was basically FDR's fault, since he changed the gold to silver ratio from 16-1, which it was for thousands of years, to 75-1, basically overnight. And you can see why this is such an inflated man-made ratio. It should be a lot lower. Regardless, though, let's cover this article and see what they have to say. Reevaluating silver's position. For an extended period, proponents of silver have contended that its market worth remains undervalued compared to gold. Extremely undervalued. If you're going to invest into something, let's say silver or gold, wouldn't you invest into the thing that's undervalued compared to overvalued? If it's undervalued, that means you're getting a good price. It's under the value, not over the value. And to say the gold to silver ratio is extremely out of whack is correct. It should be a lot lower, which means silver has more opportunity as the ratio will eventually start to go back down. We saw it as high as 125 to 1 in March of 2020. That's when silver was $11. Think about that. This assertion has been driven by the desire to witness a return to the historical fixed ratio of 16 to 1, which favored gold. Like I was saying, the gold to silver ratio was 16 to 1 for thousands of years. It comes out of the Earth's crust roughly 7 or 8 to 1, so even earlier than 16 to 1, it was 7 or 8 to 1. Considering the current price of gold at $1,925 per ounce, restoring the 16 to 1 ratio would necessitate a silver price of $120 per ounce. Now let's say it does go back to 16 to 1. Gold wouldn't just stay at $1,900, right? It would be rising along with silver. It's not like gold is going to stay at this price and silver just shoots up to $120. They both would be moving up. Silver will, I do think, take on a life of its own regardless of what gold's price does. Silver will advance. Regardless of what the dollar index does, silver will advance. Regardless of what stock market volatility does, silver will take on a life of its own because it's used for different things. It's funny that silver's price is directly correlated to gold's price when they're used for two completely different things. And I think those fundamentals will catch up sooner or later. Some say a lot sooner than later. A subset of analysts propose the possibility of a rapid and substantial surge in silver prices, arguing that $120 per ounce is an attainable objective. Nevertheless, it is improbable that such a significant upswing in silver prices would occur independently of corresponding movements in the gold market. And that's what I was saying. It's not like silver would just shoot up to $120 and gold price stays the same. They would both move. In a more practical scenario, both metals would experience significant price increases, with silver anticipated to outperform gold, at least in this context. A frequently cited upper price target for gold is $3,000 per ounce. Therefore, let us consider this figure and recalculate ratio accordingly. Upon this recalculation, the ratio still favors silver, although not as considerably as before. With gold at $3,000 per ounce and silver at $120 per ounce, that balance is 25 to 1, which means it would be a lot more than $120 per ounce if we got down to 16 to 1. As the gold to silver ratio lowers, that means silver is outperforming gold. When it rises, that means gold is outperforming silver, obviously. It is unlikely that proponents of silver would find fault with this ratio, but it is reasonable to anticipate such a scenario. It appears improbable, and here is the rationale behind this assertion. Now, here are the divergent roles. Gold is a currency, silver is a commodity. It's funny because silver is actually the currency, and if you think about it, what is constitutional silver? That was money. A walking liberty, $50 had 50 cents of silver inside of it. So if you went to the store clerk and wanted 50 cents worth of gas, you would give him a walking liberty because you exchanged 50 cents of silver, 50 cents of value, for 50 cents of gas, which was exchanging a fair trade. Silver was money as well. Nowadays, they look at silver more of a commodity and gold more as monetary value, but they both have been money for thousands of years. The fundamental value of both gold and silver emanates from their primary functions. Gold is primarily recognized as a form of real currency, supplemented by its industrial applications. In contrast, silver's primary worth is derived from its utility in various industries. Gold kind of just sits around as coins and bars and jewelry and necklaces. So gold isn't very useful. If you go back to the fundamentals, silver is much more useful and much more scarce. Therefore, it should be much more valuable. The gold to silver ratio, in my opinion, should be 81 to 1, but silver being 81 times more valuable than gold. It has 81,000 times more uses. Yes, there is some gold in technology. I used to scrap gold out of laptops and cell phones myself. But when you're looking at the overall picture, silver is the most vital element in the world, as we need a lot of silver if we're trying to push this zero net emissions by the year 2050, as we try to push electric vehicles, every company actually being an EV by the year 2030. All of that requires a lot of silver, and it's just not realistic. The silver shortage is going to be the reason we cannot go green. Think about that. It's going to be silver's fault, not gold. So gold fundamentally serves as a store of value, responding to the depreciation of purchasing power in the US dollar by appreciating it. As long as the US dollar continues to experience a decline in its purchasing power, the cost of gold is poised to rise over time, as well as silver though. However, it is unrealistic to expect silver, primarily an industrial commodity, to mirror or approximate the price trajectory of gold. Silver's foundational nature fundamentally differs from gold, and it's not interconnected. But that's just looking at the fiat-based perspective. And yes, silver will still rise with gold, but there's other reasons, like I said before, why my name is Silver Slayer, not Gold Slayer. If it sat at just that reason alone, then my name might be Gold Guy or Gold Guru. But there's more than just that reason. There's a whole other side of this thing, and I hope they bring this side into play. So, re-examining the gold to silver ratio. The Mint Act of 1792, the U.S. government arbitrarily established a 16 to 1 ratio between gold and silver prices, setting gold at $20 per ounce and silver at $1.29 per ounce. Imagine buying gold at $20 an ounce. Just imagine that. That would be insane. Subsequently, the market price of silver fluctuated, leading to a series of government interventions, including comical attempts at price supports and suppressions. In 1915, the gold to silver ratio stood at 37 to 1, decreasing to 17 4 years later. Remarkably, by 1940, 2 decades passed and the balance was 97. Like I said, in 1930, FDR got in office and changed it from 16 to 1 to 75 to 1. Remember what happened in 1933 as well. Remember the Executive Order 6102 by FDR, banning gold, saying that you, and yes, you, that own all that gold in your safe or 2 feet in your backyard underground, that's not yours anymore. That's owned by the Federal Reserve. And you have to give it to us or you're going to pay a $10,000 fine or 10 years in prison, or both. Think about that. That's insane. Following U.S. involvement in World War II, silver's primary role as an industrial commodity initiated a gradual decline in the ratio, spanning 27 years and culminating in a low of 16 to 1 in 1968. And after that period, coinciding with the global availability of gold and silver, the ratio trended upwards, nearly reaching 100 to 1 in 1991. Investors of silver, counting on a diminishing gold to silver ratio, are essentially betting on silver's ability to outperform gold in the future. Nonetheless, the balance has maintained an upward trajectory for nearly 6 decades, suggesting a preference for gold over silver. Considering the often mentioned gold to silver ratio, 1, gold and silver are distinct entities with unique functions and purposes. 2, there is no inherent rationale justifying a specific gold to silver ratio. There is inherent rationale, and that is the fundamentals of what it comes out of the Earth's crust. Gold gets recycled, reused, re-scrapped because it's mainly used for jewelry and bars, so that gets melted down to more jewelry and bars. Silver, since it's used in the industrial side of things, it gets thrown away in landfills. So that 1 ounce of gold that gets dug up out of the Earth's crust is going to stay in circulation for centuries, where silver is getting thrown away within a couple of decades. And if you look at silver's scarcity, silver will be the first metal to become extinct. And that is a fact. That is numbers. I go off numbers. We had record-breaking supply deficits this year. Hundreds of millions of ounces in the red this year. And we're only needing silver more and more and more. The COMEX vaults, LBMA vaults, and LME vaults are near empty. They came out and publicly admitted that. Silver is very scarce. If we already are hundreds of millions of ounces in the red, and we're just now advancing this new digital technological era, just imagine how many billions of ounces we'll need by the year 2030. We exceeded 1.21 billion ounces in demand this year. Will it be 3 billion ounces by the year 2030, where every automobile company is electric, where solar panels are flooded across the world, where 5G towers are as well? New inventions, any invention moving forwards that uses technology, think of like a sci-fi movie, everything's digital, that's all going to require silver, but we're finding less and less of it, and more of it is getting thrown away in landfills, never to be recycled. Solar panels have a very short half-life. It takes 500 ounces of silver in a single Tomahawk missile. We are nowhere near a reality of being able to keep up with silver's demand. It's not realistic to go green. Like, I forget who said it, but they said, if you think we have enough silver to go green, you are living in la la land. And that really hit me hard, because it's the truth. So when you look at it from that perspective, not just the dollar perspective, the other side, the more important side, since even that, the dollar will collapse eventually. It's lost 98% of its original purchasing power. We're $32 trillion in debt. So it's only natural that, yes, the dollar will collapse. And silver, silver has a negative correlation. When the dollar index is low, silver is high. Vice versa. So yes, that will push gold and silver higher, but then gold will only stop at that because that's all gold has going for it. But then the silver shortage on top of that, the silver shortage, not gold shortage, that will push silver beyond gold. It will take on a life of its own. So just to look at the first part without mentioning the second part is not, it's misleading. You're not giving the whole story. And that's why articles like this can be very dangerous for someone reading this, because they think, oh, then why in the heck would I invest in a silver? This only says gold is a better option. But that's not true. So, for those who contend that a correlation exists between two metals, may be more judicious to evaluate from the perspective of silver's low point during the Great Depression, rather than relying on the fixed price of $1.29 per ounce. In March of 1931, the price of silver plummeted to 29 cents per ounce, aligning with the broader decline in commodity prices throughout the 1920s. This represented a staggering 75% decrease from its zenith of $1.13 in June 1919. Commencing from the silver price at 29 cents per ounce and tracking its price trajectory by August 2020, when silver reached $29.26 per ounce, its growth paralleled the hundredfold increase in gold over the same 9 decades, from $20.67 to $2,058. When calculating the ratio using their respective lows during the Depression era, $20.67 divided by 29 cents, the outcome is 71 to 1. This compares favorably with the balance of 70 to 1, resulting in the calculation using August 2020 peaks for both metals. See, they're not incorporating... yes, you can go back in history and say this, but they're not incorporating the future. They're not moving forwards. We had silver back then. In the times we didn't have silver, look what happened to it. When the Hunt brothers in 1980 bought up all the silver, some say owning up to 77% of the global silver supply, because they were 3 billionaire brothers that bought all the silver on the COMEX, exchanged it into physical. They exchanged their contracts into physical delivery. The government wasn't going to let that happen because that means these three guys are going to own all the silver, and they needed silver, so what did they do? They banned it. And silver's price shot up to $50 before they banned it. It probably would have went higher if they wouldn't have pushed Silver Rule 7, which banned silver by trading on the COMEX. You couldn't buy it, you had to sell it, and you had to sell it to the Federal Reserve. So think about that. When silver was scarce back then, the price shot up. Silver will become scarce again. It already is, but it's going to become more extreme, more drastic, more dramatic, and that only means silver will grow. Low supply, high demand pushes the price up. And yes, you could say manipulation and all that, and yes, silver's price is manipulated. Actually, 3 of JP Morgan's employees got sent to prison. Well, 2. Another one for RICO charges. We don't know about that, but yes. Michael Nowak and another guy sent to prison for manipulating silver's price for several decades. Merrill Lynch and the Dutch Bank, besides JP Morgan, also got charged with this. But there will be a day and age where the fundamentals overpower manipulation. And Ted Butler wrote a brilliant article about that case alone. But anyways, in conclusion, investors and stakeholders should reevaluate declarations asserting silver is undervalued or underpriced gold. However, if one persists in calculating and relying on specific gold to silver ratio, it is vital to bear in mind the following. Gold and silver have distinct and unrelated primary fundamentals. And those primary fundamentals definitely look towards silver's, silver having more opportunity. 2, the gold to silver ratio has exhibited a prolonged trend favoring gold for almost 6 decades. 3, as long as U.S. dollar's purchasing power diminishes, gold to silver balance will persist in selecting gold. 4, when measured from their Depression-era lows, price escalations in both gold and silver display comparable trajectory. See, it seemed like this, at first they were kind of showing silver being a better investment, and then they kind of just switched face on us and pointed towards gold, but they missed a lot of very, very important dynamics. And what do you know? This article is coming from beststocks.com. These people have no idea the bigger picture. They don't do daily research. They're not silver experts like myself that have been studying this stuff for almost a decade, hours and hours a day, making daily videos, educating the public about it. This is someone who's in stocks and just knows the surface of this and doesn't even know the real reasons why we invest into silver. And that's the number one thing I tell people. You have to understand silver's true value. Because if you don't, then the second things look bad, you're going to panic and probably panic sell because you don't understand the bigger picture at play. You don't understand silver's true value. You need confirmation, validation that silver can go up. And if you don't see that validation, you're going to panic. Panic sell. Exchange it for gold or exchange it for Bitcoin or stocks. So anyways, that's why I thought this video was important, because articles like this are dangerous, not giving the full picture. They didn't even mention silver scarcity at all. They didn't mention that gold isn't scarce. They didn't talk about how gold is recycled since it's used more for jewelry and coins and bars. They didn't mention that most silver is thrown away. They didn't mention any of that. They didn't mention silver is going to be the first metal to become extinct. They didn't show the numbers. They didn't bring up the Silver Institute's data of the amount coming out of the Earth's crust and how much is used each year. They didn't mention recycling. They didn't mention any of that. There's so much more to the story. They didn't mention that silver had the record-breaking supply deficit this year, over 300 million ounces in the red this year, and it's only looking to get worse. They didn't mention any of that. They missed a lot of the bigger picture, and you can see why that is so dangerous and why I'm glad you're watching this video right now. So anyways, like I said, make sure to buy, if you want to buy some of the silver or gold, hit up Miles Franklin, send an email to info@milesfranklin.com, let them know Silver Slayer sent you, they will hook you up. And if you wanted to also win some silver, then go enter my giveaway. Links in the description or the pinned comment. Thank you so much for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.